Have you ever wondered why some people seem to win big in crypto while others lose it all? Even though they're in the same market, following the same trends, and sometimes even holding the same coins? The truth is, success in crypto isn't just about luck or catching the right coin at the right time. It's about mastering a powerful combination, a set of skills and strategies that the smartest investors use to turn volatility into opportunity. In the crypto world, you can't rely on one tool or one approach. Timing alone won't save you. Hype alone won't grow your portfolio. And following the crowd will almost always lead to disappointment. The real secret lies in balance. Understanding how analysis, psychology, and portfolio strategy work together to form what I call the ultimate winning combo. It's this synergy that separates the pros from the amateurs, the disciplined from the emotional, and the consistent winners from the ones who get wiped out. By the end of this video, you'll understand the exact three-step framework that every successful crypto investor relies on: how to analyze the market like a pro, how to think like a winner even when prices crash, and how to structure your portfolio to minimize risk while maximizing profit potential. Once you master these three combos, you'll stop guessing and start growing with confidence. Welcome to Crypto Education Zone, where we break down the crypto world in simple, practical ways so you can make smarter investment decisions. If you're new here, don't forget to subscribe and turn on the notification bell because this is where your crypto education gets real. Now that we've uncovered the truth about what separates consistent winners from emotional traders, it's time to break down the secret formula. Because winning big in crypto doesn't come from luck. It comes from mastering three powerful combos that work together like gears in a machine. The first combo is all about understanding the language of the market itself, the data, the trends, and the emotions that drive price movements. This is where knowledge turns into strategy. So let's dive into the first combo, the Analytical Trio: fundamental analysis, technical analysis, and sentiment analysis, the foundation every successful crypto investor builds on. When it comes to winning big in crypto, knowledge is your real edge. The most successful investors don't rely on luck. They rely on analysis. And not just one type of analysis, but three that work together in perfect balance: fundamental analysis, technical analysis, and sentiment analysis. Each one plays a unique role in helping you decide what to buy, when to buy, and how the market feels about your decision. Let's start with the foundation, the fundamental analysis. Fundamental analysis is the bedrock of smart investing. It's how you determine the true value of a project, beyond the price you see on the screen. FA focuses on long-term strength, the kind of insight that helps you identify projects that can survive the noise, volatility, and hype cycles that dominate the crypto world. When doing FA, you're essentially asking, what gives this coin or token real value? You look at its technology, what problem it solves, and how innovative it is. You examine the use case. Is it something the world actually needs, or just another copy of an existing idea? You review the team and partnerships, because strong leadership and credible backers often signal sustainability. Then you dig into tokenomics, how supply and demand are structured, how tokens are distributed, and whether there's real incentive for long-term holding rather than short-term flipping. Finally, you look at the roadmap, the project's vision for the future, and whether it's executing consistently. Take Ethereum as an example. Back in its early days, investors who did their homework noticed its powerful fundamentals: a visionary founder in Vitalik Buterin, a clear use case through smart contracts, and a growing developer ecosystem. Those who recognized Ethereum's intrinsic value early on weren't just investing in a coin. They were investing in the foundation of decentralized finance, NFTs, and Web3 as we know it today. Years later, that same solid foundation is what allowed Ethereum to maintain dominance despite countless competitors. The key takeaway? Fundamental analysis helps you choose what to invest in. It separates quality projects from hype and gives you confidence in your long-term picks, even when short-term prices fluctuate. Technical analysis, or TA, the timing tool. If fundamental analysis tells you what to buy, then technical analysis tells you when. Timing can make or break your profit potential, and TA is the investor's compass for navigating market entry and exit points. Technical analysis focuses on price charts, patterns, and volume data to forecast potential movements. It's about understanding market psychology through numbers, how traders behave, and where they might act next. You look at trends to see whether momentum is building upward or downward. You identify support and resistance levels, the invisible zones where price tends to bounce or stall. You use tools like moving averages to smooth out volatility and track longer-term direction, and indicators like RSI, Relative Strength Index, to spot when a coin is overbought or oversold. For example, imagine a crypto asset that's been consolidating quietly after a long downtrend. Suddenly, trading volume spikes, the price breaks above its resistance level, and RSI starts showing strong momentum. Those are signs of a potential breakout. Investors who understand TA can spot these early signals before the wider market catches on, positioning themselves right before a major price move. TA isn't about predicting the future with perfect accuracy. It's about increasing your probability of success. It gives you structure, helps remove emotion from decisions, and enables you to plan entries and exits strategically instead of reacting impulsively. The key takeaway? Technical analysis helps you know when to act. It's your timing tool, a way to align your trades with the rhythm of the market instead of swimming against it. Sentiment analysis, or SA, the emotional pulse. If fundamental analysis shows a project's real worth, and technical analysis shows price behavior, then sentiment analysis reveals something even more powerful, the emotional pulse of the market. In crypto, where most investors are retail participants and news spreads in seconds, emotion can often move prices faster than logic ever could. That's what makes sentiment such a critical piece of the puzzle. Sentiment analysis is all about measuring how people feel, whether the market is driven by fear, greed, or hype at any given moment. It looks at the collective mood of traders and investors by analyzing what's happening on social media, in the news, and across major online communities. Platforms like X, formerly Twitter, Reddit, Telegram, and YouTube are modern emotional barometers. A single viral post can shift billions in market value. For example, think back to the Dogecoin rallies fueled by Elon Musk's tweets. Each time he mentioned or joked about Dogecoin, investor excitement skyrocketed. Prices spiked within minutes, not because of any change in the coin's fundamentals, but because emotion took control of the market. On the flip side, fear-driven events, like rumors of government bans or exchange collapses, can spark mass panic, sending prices crashing even when the underlying assets remain strong. Tools like the Crypto Fear and Greed Index, Lunar Crush, and Santient help quantify this emotional data. They track keywords, engagement spikes, and overall sentiment trends to give you a real-time snapshot of how the crowd is feeling. When the index flashes extreme greed, it's often a signal that the market might be overheated. When it shows extreme fear, it usually indicates opportunity, because the best investors know that panic often creates discounts. The key takeaway? Sentiment analysis helps you understand how people feel, the emotional engine of the crypto market. By reading the crowd's mood, you can anticipate waves of excitement or fear before they fully reflect in price action, giving you a valuable edge in decision-making. And this takes us to the power in combination. Now that you understand all three components, fundamental, technical, and sentiment analysis, here's where the real magic happens. Combining them. Each one on its own is powerful, but together they form an unbeatable strategy that helps you see the market from every possible angle. Think of it like this. FA shows you the value, TA shows you the timing, and SA shows you the emotion. When all three align, the probability of success skyrockets. Imagine finding a fundamentally strong project, one with real-world utility and solid development progress, FA. You notice its chart is forming a bullish breakout pattern with strong volume, TA. At the same time, sentiment across social media and news outlets is turning positive, with rising excitement and growing attention, SA. That combination often signals the beginning of a major move, the kind of setup that early investors dream about. It's like a three-engine rocket. FA is the fuel, giving your investment power and purpose. TA is the direction, helping you steer precisely through the market. And SA is the weather forecast, letting you know whether the conditions are favorable for liftoff or too stormy to launch. When all three engines fire in harmony, you have the momentum, clarity, and confidence to make truly strategic moves, not emotional guesses. By now, you've seen how mastering analysis, through fundamentals, technicals, and sentiment, helps you understand what to invest in, when to act, and how the crowd feels. But even the best strategy means little if your mindset isn't right. Because in crypto, charts and data can guide you, but emotions can still destroy you. Many investors lose not because they lack knowledge, but because they can't control fear, greed, or impatience. That's why the second combo is all about mastering yourself. Let's talk about the mindset combo, how to think, act, and stay grounded like a true winner in the crypto game. When it comes to winning big in crypto, knowledge and strategy matter, but mindset is what separates those who survive the market from those who get washed out by it. You can master all the charts, indicators, and sentiment tools in the world, but if you can't control your emotions or think long-term, the market will test and humble you. The truth is, crypto rewards patience, discipline, and self-awareness far more than quick reactions. This is where the mindset combo comes in, the inner discipline that keeps you grounded when the market swings wildly between greed and fear. Number 1. Emotional control. The crypto market is designed to test your emotions. One moment, you're euphoric as your portfolio doubles. The next, panic sets in as prices plunge. Those emotional swings are where most traders lose, not because their analysis is wrong, but because their mindset isn't strong enough to handle volatility. Emotional control means learning to stay steady when the crowd isn't. It means ignoring the constant noise of social media hype, resisting the urge to FOMO into every trending coin, and avoiding panic selling when red candles start flashing. The investors who win big are not the ones who chase every pump. They're the ones who stay calm, strategic, and consistent even when chaos surrounds them. Take 2022, for example, one of the toughest years in crypto history. The market collapsed, major projects failed, and fear dominated everywhere. Many investors sold in panic, convinced crypto was over. But the disciplined ones, those who understood cycles and controlled their emotions, stayed patient. They accumulated quality projects when prices were low. Fast forward to 2023 to 24, and those same investors saw massive gains as the market recovered. The key takeaway? Control your emotions. Don't let emotions control you. In crypto, the real enemy isn't volatility, it's your reaction to it. Every decision you make under emotional pressure is a potential mistake. When you master emotional control, you stop being part of the crowd and start thinking like the smart money. Now that you have taken control of your emotion, the next is to have a long-term vision. Crypto doesn't reward impatience, it rewards conviction. To win big, you must understand that this market moves in cycles. Waves of euphoria, followed by deep fear, and then quiet accumulation before the next surge. The people who make life-changing gains aren't the ones who flip coins daily. They're the ones who can zoom out and think in years, not days. Every great crypto success story has one thing in common: long-term vision. Look at Bitcoin, for example. In every cycle, it experiences breathtaking rallies followed by brutal crashes. In 2013, Bitcoin soared to over $1,000, and then crashed below $200. In 2017, it hit $20,000 and fell to $3,000. In 2021, it reached nearly $69,000 before dropping to around $16,000. Yet in every cycle, it came back stronger. The investors who held through the noise, focused on fundamentals, and believed in the long-term trend were the ones who ultimately built real wealth. Long-term vision also means having a strategy and sticking to it, even when emotions or short-term headlines try to shake your confidence. Instead of reacting to every dip or tweet, focus on the bigger picture: adoption, innovation, and growth over time. Patience isn't just a virtue in crypto, it's a superpower. When you combine emotional control with long-term vision, you build the mental resilience to thrive in any market condition. You stop chasing temporary highs and start building lasting success. Because in crypto, the biggest wins don't go to the fastest, they go to the most disciplined. Number 3 in the second combo is continuous learning, a key factor you must hold firmly. In crypto, the moment you stop learning is the moment you start losing. This market evolves faster than any other financial ecosystem in the world. New narratives, technologies, and opportunities emerge every few months. One year it's all about DeFi, the next it's NFTs, then AI tokens, Layer 2 scaling solutions, or real-world assets. The pace of innovation is relentless. What worked last year might not work today, and what's undervalued today could be the next big winner tomorrow. That's why continuous learning isn't optional, it's survival. The investors who thrive are the ones who stay curious and adaptable. They don't just follow trends, they understand why those trends exist. They read white papers, listen to expert analysis, watch educational content, and analyze data to make informed decisions. Think of it this way: the more you learn, the less you depend on hype. When you truly understand how blockchain works, what tokenomics mean, or how liquidity affects price movement, you stop chasing noise and start identifying real value. You become a student of the market, not a victim of it. And that's exactly what we stand for here at Crypto Education Zone, CEZ, helping you learn smarter, not just trade harder. Because education builds conviction, and conviction builds long-term success. In a space filled with speculation, knowledge is the ultimate edge. So keep studying, stay updated, never assume you've figured it all out. The crypto world rewards those who evolved with it, the learners, the thinkers, and the builders who see beyond the headlines. Number 4 is risk awareness and discipline. If mindset is the foundation of success, then discipline is the structure that keeps it standing. The truth is, crypto can be brutal. No matter how good your analysis is, there will always be unpredictable volatility, flash crashes, and emotional pressure. That's why you must always respect risk. Risk awareness starts with one rule: never invest blindly or emotionally. Every trade, every investment should be guided by a clear plan, not by fear, hype, or greed. Smart investors set targets before entering a position. They decide how much to risk, where to take profits, and when to cut losses. Tools like stop-loss orders aren't just for traders. They're for anyone who wants to protect their capital in unpredictable markets. Discipline also means knowing when to sit out. Sometimes the best move is no move at all. Waiting for the right setup rather than forcing trades out of impatience can save you from unnecessary losses. Crypto will always give you another opportunity, but your capital must survive long enough to seize it. One of the biggest reasons people lose money in crypto isn't lack of opportunity, it's lack of discipline. They let emotions override logic. They chase every pump and they ignore risk management until it's too late. But when you build discipline into your strategy, you turn chaos into clarity. The takeaway is simple yet powerful. Your mindset is your ultimate risk shield. Markets may crash, trends may fade, but a disciplined, educated, emotionally balanced investor will always find their way back to success. By now you understand that having the right mindset is what keeps you steady when the market gets wild. It's your internal armor against panic, hype, and emotional trading. But mindset alone isn't enough, because even the most disciplined investor can lose big if all their money is trapped in the wrong place at the wrong time. That's where the third combo comes in: portfolio diversification. This is the strategy that protects your wealth, balances your risks, and positions you to win no matter how the market moves. Let's dive into how spreading your investments smartly can keep you safe and set you up for long-term success. Diversification is one of the most underrated yet essential strategies for long-term success in crypto investing. No matter how skilled you are at reading charts or analyzing fundamentals, the truth is that no one can predict the market with absolute certainty. The crypto space is famous for its volatility. Prices can skyrocket or crash overnight due to news events, regulation changes, or even social media buzz. That's why smart investors don't rely on a single coin or project to make them rich. Instead, they spread their investments strategically to reduce risk and create a portfolio that can survive both bull and bear markets. When you diversify, you're essentially protecting yourself from the unpredictable nature of the market. Think of it like building a financial safety net. If one asset fails, others can keep your portfolio afloat. For example, during market downturns, even strong altcoins can drop 70% or more, while Bitcoin might only fall 40 to 50%. Holding a balanced mix ensures you're not overexposed to one project's failure or one sector's decline. Diversification doesn't just protect your downside, it also allows you to capture upside opportunities from multiple areas of the crypto ecosystem. A simple and effective way to approach diversification is through what we call the three-layer portfolio model. The first layer is your core holdings. These are your foundation, assets that have stood the test of time and proven their resilience. Bitcoin and Ethereum typically dominate this category. Bitcoin, as the original cryptocurrency, serves as the digital equivalent of gold, a store of value and market leader. Ethereum, on the other hand, powers a massive ecosystem of decentralized applications and smart contracts, making it a long-term growth engine. These core holdings are meant for stability and slow, steady growth over years, not weeks. The second layer consists of your growth plays. These are mid-cap projects with strong fundamentals and clear use cases that are still growing. Think of promising Layer 2 solutions like Arbitrum or Optimism, or established DeFi protocols such as Aave and Uniswap. These assets carry more risk than your core holdings, but also have higher potential returns. They represent the innovation edge of crypto, projects building the next wave of blockchain adoption. By including them, you position your portfolio to benefit from technological progress and emerging market trends. The third and final layer is made up of your high-risk bets. These are small-cap or early-stage projects with huge upside potential, but significant uncertainty. Examples might include new tokens in gaming, AI, or emerging blockchain ecosystems. You shouldn't allocate much here, maybe 5 to 10% of your total portfolio, but these positions can yield massive rewards if one or two projects take off. The key is to treat them as speculative opportunities, not core investments, and to enter them only after careful research. When balanced correctly, this three-layer approach helps you stay grounded during market downturns while still giving you exposure to explosive opportunities when the next bull run hits. It's like having a team where each player has a specific role. Bitcoin provides strength, mid-caps offer momentum, and small caps bring agility and potential surprise victories. Also take cognizance of balancing risk versus reward. Every investor's portfolio should be built around one guiding truth: balance is everything. Not every coin deserves equal weight, and not every opportunity deserves your full capital. The key is to structure your portfolio according to your goals, capital size, and personal risk tolerance. If your goal is long-term growth with stability, then your foundation should lean more on proven assets like Bitcoin and Ethereum. But if you're seeking higher returns and can stomach volatility, then you might allocate a portion to newer or smaller projects with strong potential. The biggest mistake most beginners make is going all in on hype coins or following a single market narrative. For instance, during the DeFi boom or meme coin season, many investors poured everything into trending tokens, only to watch their portfolios crash when the hype faded. Smart investors, on the other hand, always ask, "What's my exposure?" They make sure no single asset or sector can destroy their portfolio if things go wrong. Winning big in crypto isn't about betting everything on one lucky coin. It's about balancing reward and protection across multiple well-chosen plays. And finally, on this third combo, the rebalancing strategy. Even the most perfectly structured portfolio won't stay balanced forever. Markets move, and with them, your allocations shift. That's where rebalancing comes in. Regularly reviewing and adjusting your portfolio helps you lock in profits, minimize losses, and keep your plan aligned with your goals. For example, if you started with 50% Bitcoin and it skyrockets in a bull run, your Bitcoin might now make up 70% of your portfolio. Rebalancing would mean taking a portion of those profits and redistributing them into undervalued or lagging assets. Similarly, during market dips, rebalancing allows you to scoop up quality assets at discounted prices, positioning yourself for the next wave of growth. Rebalancing doesn't mean constantly trading. It's about staying disciplined. You can do it quarterly, after major market moves, or based on clear thresholds. The point is to stay proactive, not reactive, to manage your portfolio with intention instead of emotion. Takeaway: diversification ensures survival first, growth second. In crypto, survival is victory. The investors who last the longest are the ones who protect their capital when others lose theirs. Diversification isn't just a safety net, it's a growth strategy built on patience and discipline. By spreading your investments, balancing risk versus reward, and rebalancing with logic instead of emotion, you give yourself room to win big without risking everything in one move. Think of diversification as your shield. It keeps you standing through storms so you're still around to enjoy the sunshine. Because in the world of crypto, it's not just about who makes money fast, it's about who's still standing when the dust settles. Now that we've explored all three combos, the Analytical Trio, the Mindset Combo, and the Diversification Combo, it's time to see how everything connects. Because success in crypto isn't about mastering one skill, it's about synchronizing them all into one powerful strategy. The winning formula looks like this: fundamental analysis plus technical analysis plus sentiment analysis multiplied by strong mindset multiplied by smart diversification equals long-term crypto success. Each part plays a crucial role. Fundamental analysis gives you clarity on what to invest in, the solid projects with real value and long-term potential. Technical analysis guides you on when to enter or exit those investments, helping you ride trends, not chase them. And sentiment analysis reveals how the market feels, letting you understand whether fear or greed is dominating the scene. But even with all that analytical power, none of it works without the right mindset. A strong, disciplined mindset helps you stay calm when prices crash and patient when the market moves slow. It keeps you grounded during hype phases and focused on your long-term goals instead of emotional impulses. Then comes the final piece: smart diversification. This ensures you're not betting your entire future on one coin or one narrative. It spreads your exposure, balances your risk, and protects your portfolio so you can survive any market storm. Let's take a quick example. Imagine an investor who spots a strong Layer 2 blockchain project with solid fundamentals. That's FA at work. They wait for a breakout signal using chart patterns and volume indicators. That's TA. They also check the sentiment online, seeing rising optimism and healthy community engagement. That's SA. Instead of going all in, they allocate a reasonable percentage of their portfolio while keeping other assets balanced. That's diversification. And when volatility hits, they stay calm and follow their plan. That's mindset. This kind of investor doesn't just react to the market, they anticipate it. They combine logic, emotion, and discipline into a system that consistently works, regardless of whether it's a bull or bear market. Visually, you can imagine these three combos like interlocking gears in a powerful machine. When all three turn together, analysis, mindset, and diversification, they create unstoppable momentum. Miss one gear, and the system wobbles. But when they align perfectly, your crypto strategy runs smoothly and efficiently, turning every opportunity into progress. In short, the perfect combo isn't a secret trick or magic formula. It's a balance of knowledge, patience, and strategy. Master these three elements, and you're not just surviving in crypto, you're setting yourself up to win big. Let's quickly recap what we've learned. First, the Analytical Trio: fundamental analysis, technical analysis, and sentiment analysis gives you the knowledge and timing edge. It's how you understand what to invest in, when to act, and how to read the emotions driving the market. Second, the Mindset Combo: emotional control, patience, and discipline builds your mental strength. It's what keeps you steady when others panic, focused when others get distracted, and confident in your long-term vision. Third, the Diversification Combo: spreading your portfolio wisely gives you risk control. It's your safety net, ensuring you survive market volatility while positioning yourself for consistent growth. The core message is simple but powerful. Winning big in crypto isn't about luck, it's about alignment. When strategy, psychology, and structure work together, you stop gambling and start growing. You stop reacting emotionally and start making calculated, confident decisions that compound over time. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss a deep dive lesson from Crypto Education Zone, your home for clear, actionable crypto education. And remember this: knowledge, mindset, and balance, that's your edge in the world of crypto.